Hi, I'm Leanna Haakons, and this is the SALT Sideline Report. We are here at SALT, New York, with Starr. She is the head of global impact at the Carlyle Group. Major woman in the impact world. So happy to have you here.
Thanks for having me.
So Megan, tell me how climate change is affecting the space that you work in with investors at the Carlyle Group.
It's interesting. When we entered 2020, climate change was the topic du jour. It was the only thing people were talking about at WEF. It was all over the news. CEOs were focused on it. And then COVID hit. And I actually got a lot of calls in the early days of COVID with people saying things like, oh man, like, does this mean this is suddenly a lot less relevant? Like, is your job less relevant? And we actually saw the exact opposite in COVID. And COVID, if anything else, accelerated the focus on how companies were thinking about these external dimensions of risk and opportunity, particularly when you think about left tail exogenous shocks like the climate crisis. And so throughout COVID, what we saw was that management teams were focused on agility and being forward-thinking, thinking expansively about how their businesses fit into the world. We're actually well positioned to weather COVID, and frankly have been the companies that have been at the forefront about thinking through climate resilience as well.
And to that, actually, we were talking earlier about ESG financing and how that fits into climate change and other ESG topics that have been talked about very much in the last 18 months over COVID-19. What does ESG financing look like, and what are some of the trends you're seeing in that area?
ESG financings are a great example of how the tools of conventional private markets are really intersecting with the forces of environmental and social progress in a fascinating way. So we've done north of $10 billion in ESG-linked financings across Carlyle portfolio companies and our lines of credit. Wow. And the basic idea is you can link the price of debt to progress on environmental and social goals now. And you can actually get meaningful reductions in your debt expense if you hit those targets. Mm-hmm. So one quick example, we've done ESG-linked financings that focus on carbon dioxide. If you reduce your emissions, you get a discount from your debt. We also did a $4.1 billion facility in the US that was tied to our board diversity goal of having 30% diverse directors. And so as we get closer to that goal, we get cheaper cost of capital for our fund line of credit. So just a really interesting way of that convergence between profitability and environmental and social progress.
So it sounds like the Carlyle Group has, and with your help and your team, of course, had done a really good job at defining what ESG means to you as a group. How is the definition of ESG and data important to investing in this space? And why is it so talked about that there's really not a great definition of it for the investing world?
I actually think the fact that there isn't one single definition for ESG is a great opportunity, because that means there's a dispersion of approaches and quality and rigor, which is a great thing for active management when you can sort through and actually figure out who is using ESG to focus on material financial performance. And so in regards to ESG data, we've been thinking a lot about how do you converge towards ESG data points that are performance-based, meaningful, quantitative, and ideally comparable. Because we need to be able to see how companies are excelling across industries and across sectors. And so I think there's both great promise in terms of where the field is heading on convergence, but I also think there's a ton of opportunity in being able to sort through the cacophony of there being so much attention on this field without kind of one core definition yet.
And just as a final question, what are your one favorite area, or maybe top two favorite areas of the world of impact investing where you can see that change is really happening?
Yeah. Well, it's like asking to pick your favorite child. I know. My favorite area of climate change is the energy transition, because I think there is such a massive, rapid decarbonization happening across the economy. And the story is about renewables, but it is also about all sectors of the economy. And I think private equity is really well positioned to help companies think about their positioning vis-a-vis the energy transition and really capitalize from being at the market front. And then the other topic that I really love is this concept I call dynamic materiality. In ESG land, the issues are always changing. And so things that used to be innovative are now market standard. New issues are always emerging. And so we're always trying to look around corners to see what's coming down the pike and how to better position our portfolio to be at the forefront of that.
Well, thank you so much for chatting with us today at the Sideline Report. The work that you're doing is very important, and we're so happy for all the progress that you're making with Carlyle Group.
Thank you for having me.